My name is Mike Sullivan. I'm a former IRS agent and teaching instructor. Welcome to my YouTube station. This is the home of the 5 minute or less video. Just a little about me. I worked at IRS for a decade. I've been in private practice for 4 decades. Yes, I've been doing this 50 years. I'm a national expert in IRS resolution. If anyone tells you anything different, then I'm telling you they're actually lying to you, or they don't know what they're talking about. And to be honest with you, most people, in fact, do not know what they are talking about. There's a lot of salesmen trying to get in your pocket on these YouTube stations. I have a team of former IRS agents. We've been doing this so long. You can find my information in the description section should you need representation, consultation. Anyway, being a former IRS insider, I want to tell you why you get audited. The number one reason you get audited. There's a lot of reasons that you get audited, tons of them, actually tons. There's national projects, local projects, regional projects, people that take extra credits, people that take cash, people who deal in cash, people who get statements from banks, or people who get turned in by third parties. You get audited for that. There are a bunch of reasons you get audited. Ending all your tax return expenses with zero. The number one reason that you get audited is your DIF score, DIF. It's your discriminatory index function score. The number, say that with me, discriminatory index function score. The number one reason you get audited by IRS. What is the DIF score and why is it so important? Well, the truth of the matter is that IRS, in fact, does not audit you. Their computer does. That's been programmed with a series of algorithms and filters that looks at your tax return and determines your tax return is subject to audit. Now, there are certain returns, very few, that are selected nationwide just for a comprehensive audit to find out where cheating happens. Maybe every 20,000th return gets audited just so IRS kind of knows if there's a new wave of cheating. So this is what happens. IRS looks at last year's numbers, and they look at the ranges of any number that's taken on your return. So what they do is they plug in your income, and they look at all the expenses, all the deductions, everything that you are deducting from your income. It all goes on certain line items and all goes through IRS's algorithms. What IRS does is they go ahead and they scan your tax return for using these filters to determine how far you are out of the national average in those expenses. And when you score too high a number, boom, your return then goes to a series of people who look at returns to find out if your audit is worthy for them to go ahead and audit. Let me give you an example. Let's say IRS computer scans you and you have a DIF score of 80, just made the DIF score of 80 up. That doesn't mean everyone who has a high DIF score of 80 is going to get audited. Why? IRS only has so many people to go ahead and audit. IRS wants to have a good ROR, or rate of return, in auditing. So they may go ahead and look at this batch of 100, and the IRS statistics or the IRS goals for those years may say, we only want the top 10 of those 100 that you think. Those are the ones that we think that were worthy and they're going to collect money. Those are the ones that they go ahead and audit. So your DIF score kicked out a high number. So how do you control your DIF score? Well, you've got to make sure you're within a range of the national average for expenses, deductions, dependents, and credits that you're taking. How do you do that? Well, there is no way that you can plug into IRS DIF scores or filters. As a former IRS agent, I can just look at your return and look at it and say, that return is completely out of proportion. The best way is to have a third party who's in the business or a former IRS agent look at your tax return and say, that looks like it's out of the national average. Let's say you make $100,000 and you have income, or you have interest expense of $30,000, which seems high. that's a really high flag, and it's going to drive up your DIF score. So when IRS looks at your return and that DIF score goes higher and higher and higher and higher and higher, boom, your return is probably going to get kicked back for an audit, kicked out for an audit, if in fact there's another agent to look at the return. How do you know what IRS thought was high? When IRS sends you your audit letter out, they will tell you exactly what on your return they're auditing. That will tell you where your DIF scores came from and why you got audited. If you need IRS audit representation, you better call former IRS agents, because we know the system and the inside skinny and scoop to save you money. If this information was helpful, please hit me a subscription. That's really big. Not for me, but YouTube. YouTube wants subscriptions. It looks like people like value, so that would really help me. If you want me to do a YouTube, man, just hit me up. Say Michael in the comment section. Do a YouTube. You can find my information in the description section. Thank you so much for listening. I always appreciate it. Me and my M&M man give you a thumbs up.